subjecting its investors to a significant hacking attack. But it was a great project because it really introduced me to the possibilities that tokenizing funds might have, especially in the world of venture capital. So I very much look forward to our conversation tonight and with each of you.
Thank you. Thanks, Robert. And my name is Herman Lu, and the managing partner of Andrew Capital. We are arguably probably the first tokenized late-stage technology fund, and investing in the Silicon Valley late-stage technology companies whose exit is already on the horizon. And we use blockchain, created such a technology solution for the fund managers as well as our investors to better manage their asset. At the same time, we provide global access to the investors all over the world, and invest in the best companies here in the Silicon Valley. Of course, at the same time, this technology create liquidities for this venture asset. This is something nobody has ever done in the past. Liquidity is probably a big setback for venture investment, especially in the emerging market where I travel quite often. Most of the investors, when they heard their asset would be locked up in the fund for 10 plus years, they were like, what? Okay, I want to invest in this year and exit next year. Okay, if you cannot do it, okay, sorry. But at the same time, a lot of emerging market investors come to Silicon Valley, knocking on the doors of Sequoias in Silver Lake, and will turn away, telling them, okay, thanks, but no thanks. We don't need money. And if you want to invest in our fund or in those big, best companies, take a number and wait in the line. So I think in this opportunity, blockchain really opened the opportunity to level up this play field. Thank you.
Go ahead, bring it, yeah. Woo! Hi, my name is Jonathan, and I'm not going to say I'm an alcoholic because I'm not, but that would be really funny. Hi, my name is Jonathan, and I'm the managing director of the Hack Fund. I am the founder of Hackers and Founders. We're one of the largest networks of nerds building startups around the world. We've had an event in about 140 cities around the globe. A couple 100,000 entrepreneurs have attended our events. And the last 5 years, we've been helping companies come from overseas and land in Silicon Valley. We've done really well at that. We've done a great business, and most of these companies want to come here to sell their company or to raise money. I was invited to join an advisory committee at the SEC, looking at why so much money got invested in Silicon Valley, and so little money gets invested in anywhere else in the world in terms of venture capital. And it boiled down to the issue of liquidity, i.e., if I'm an investor in a startup, I buy your stock. I only make money if you let me sell that stock to Google when it acquires you, or if you let me sell that stock on an IPO. 85% of the world's mergers and acquisitions happen in Silicon Valley. And so that's why 2/3 of all of the world's angel money, investor money, venture capital gets invested here. Here's where you have liquidity. So that's just bugged me. It's been a great business for me, helping companies move here. I am obsessed with providing more liquidity to more startups around the globe. And I have been on a kind of a Don Quixote quest to make that happen. And so to do that, we've created a fund that has a digital stock certificate. For the last couple of years, everybody in the crypto community has been like, oh my God, oh my God, oh my God, is my token a security? Is my token a security? And I'm like, holy crap, they're all securities. Yes, the easiest use of a blockchain, the lowest hanging fruit is to create a digital security that's sellable online. Like, let's make more securities digital, and let's comply with the laws. So we spent a lot of time looking at legal jurisdictions, how to not end up in jail doing this. I've talked with the SEC. They did not throw me in jail. They cannot tell me that I'm doing great, but they just tell me if I was going to go to jail or not. So that didn't happen, so I feel like I'm doing good. But my vision is to how do we transform the world of startup finance so that startups anywhere in the world can receive investment from funds that are already liquid, and then we can issue digital stock certificates so that they can go to crypto IPOs, and they can raise crowdfund from around the world, and those crowd investors can actually make money because they're trading their stock. So that, in a nutshell, is kind of what we're doing at Hack Fund.
Awesome. Thank you everyone for the introductions. That's great. So, if you're like me, I came from more of a traditional kind of finance background, did leverage finance, did 138 deals in 3 years, structuring transactions. I got into crypto though, and almost by accident. And so I had clients call me and said, I'm looking to do an ICO. I was like, oh, you mean IPO? And I said, no, an ICO. Right? And so from there, it kind of snowballed. And I would say a year ago, a lot of funds came to me and they said, I'm looking to tokenize my fund. And I said, okay, well, what do you actually mean? Are you going to be trading in crypto, so you just have a fund and you're going to invest in underlying portfolio companies, or the actual assets like Bitcoin? Or are you going to actually tokenize the LP interest of your fund in the old version of a paper LP interest that you used to get? So I give you money, the fund gives me an LP interest back. Legal agreement, right? That instead, you get back a token. And what is that token, right? I spent a lot of time during the day saying, like, what is that? What is that thing, right? And so for a fund, the LP interest is the token that you get back is just a digital representation of your contract. It's as simple as that, right? And so there's a lot of confusion around tokenizing a fund versus I have a fund itself that invests and trades crypto. So maybe if I turn it over to Herman and Jonathan, if you could maybe explain a little bit about what are distinction between the two.
Well, I really like the term that Nick just coined, digital representation. I think look at the history of not only fintech, the internet. It's a lot of progress or innovation is about digital representation. That you just said reminded me my old days with Charles Schwab, a firm a few blocks down that way. Schwab is the first one started discount brokerage. And before that, old-fashioned, right? Okay, you have to pick up the phone to call your broker to make a trade, and he or she would charge you $100. And at that time, investing in the stock market is probably rich people's service only. You have to go to Morgan Stanley or Merrill Lynch, and the minimum asset requirement is $1 million at that time, 30 years ago. That's a lot of money. So Schwab started this discount brokerage and really lowered down the entry barrier. Let ordinary people can trade, and you can open an account with Schwab as little as $5,000. And everything is digital, online, real-time quote, the data and the information analytics, and you just self-service. And this is a good example of digital representation for the stock market investment. And now I think we are looking at probably a similar thing. It's going to happen, with birth of blockchain and the crypto.
So for us, we are a fund that invests in security, primarily stock securities. There are other types of securities. Bonds are securities, debt is a security, a mortgage is a security. We are focusing on stock type securities and digital securities. The SEC sees the vast majority of crypto tokens as a security. That's not me, that's the SEC, and that's the Supreme Court, that's their decisions. Don't yell at me. But in my mind, we are going to be buying securities, both of the stock variety and startups, and then we are buying regular securities from like tokens. But our fund itself has a token. And so we are structured not as a partnership, where you hear limited partners and general partners. We are actually structured as a company with shares, so we're an investment company. And our shares have a legal document that says, our digital stock certificates are represented by this ERC20 token. And that token will be traded on online exchanges. And so I heard you like crypto. So we have a crypto that invests in crypto, and it takes startups and it helps them issue crypto stock. So, we're fairly meta. But I believe why we're doing this is I believe that this is the future of finance. In the future, pretty much any financial asset that can be tokenized and represented by a digital stock certificate or a smart contract will, because it's so much easier to say, hey, what's your wallet address? Here, let me give you my token and pay you this way, instead of doing a wire transfer or filling out reams of paperwork to buy a mortgage or that sort of stuff. In the future, I believe that everything, software eats the world. I believe blockchain is going to eat finance. So.
That's great, thank you. So yeah, to maybe unfold that a bit more too, just because I know it took me a while to distinguish between the two. Imagine a real estate fund, right? Like that's a good example. So a real estate fund aggregates money, goes and buys real estate. So the tokenization of that, whether it's a partnership on the top that aggregates the money, or whether it's a C corporation and you get a share back or digital representation, that would be an example of a tokenized fund. It doesn't necessarily mean that they invest into crypto, right? It means their interest, the equity interest, that forget security, utility, the equity that you get back is digital, rather than a stock certificate, rather than a limited partnership agreement, right? And so that is a key distinction that I think a lot of people miss. However, the reason it gets muddied is because there are also funds that are not tokenized that just trade crypto, right? And that's a totally different animal. So what's unique, I think, about both of your funds is that you invest into equity down below, but you yourself have tokenized the fund. So maybe, and Rob, I'd like your perspective on this too. I've had a lot of funds come to me, and their thesis was, I'm going to be investing into technology companies. Some of them are crypto, some are taking back equity. But to show my competency to the founders, I myself am tokenizing my fund, right? I don't just invest in it, I live it. I've gone through the process, and so I'm a better partner, I'm a better LP, right, in your business. So, Rob, I'm curious your thoughts from sort of a regulatory perspective, and then maybe if you could give the fund perspective on that.
Sure. So what I think is there is a tension in this space about tokenizing a fund. And under US law, whenever you sell a security, the security has to be issued either pursuant to a registration statement, which is what happens in an IPO, or be subject to an exemption from registration. So in the traditional world of venture capital, private equity, all those funds are relying on private placement exemptions. And what that means is they sell their securities and are subject to transfer restrictions, meaning that the people who buy them can't easily transfer their interest to other people without getting special permissions and consents. And it's supposed to be kind of a closed world. It's not supposed to be publicly distributed to the world. And it's also the investors in this space are also supposed to be sophisticated. And sophistication in the eyes of the SEC is measured basically by wealth. You probably have all heard about the accredited investor definition. Well, on the other hand, you have securities that are issued pursuant to registration statements. So an example of that would be like a mutual fund interest. And that is something that trades freely on exchanges. You can buy it or you sell it, and you don't even need to be an accredited investor. So what we're seeing here with the rise of tokenized funds is an attempt to kind of collapse those two regimes. One, you're still relying on a private placement, but you're also creating a fund that has a token that's supposed to be able to trade freely. And so there's a natural tension there. And so there's a number of regulatory challenges that have to be solved. And I think this entire industry, and not just the United States, but globally, is wrestling with these issues. And one of the key issues is if you sell an interest in a fund that is subject to transfer restrictions, how do you actually mesh those transfer restrictions with the fact that you're also issuing a token that you hope will trade freely on a secondary market? And that issue translates to a lot of other issues that I don't want to bore everyone with, because I know Jonathan and Herman, you probably have some ideas that you want to talk about on restrictions as well.
I love me some securities law. But I'm here. No, it's a very, very bad idea to try to do this in the United States under US securities laws. So unless you guys are actually high net worth individuals, you cannot buy my stock and my fund. I am limited to 99 wealthy investors in the United States, and those investors will only be able to trade on what's called an alternative trading system, or an ATS. We're talking with Shares Post about that. So we are keeping out people from the United States. We have offices in multiple countries, so it actually makes sense for us to have a Cayman parent company and a Cayman Islands fund. The Cayman Island has 2 laws, which have, after talking with 12 law firms in 10 different legal jurisdictions, Cayman Island was just like a, ah. So they have two very specific laws. One is which publicly traded closed-end funds, which is a technical description of what we are unregulated in the Cayman Islands. You can create one there, but it's unregulated, i.e. they're not going to be sure it's not a scam, so buyers should beware. The second law is that they cannot make a distinction between a digital document and a paper document. So we are issuing, instead of paper stock certificates, we are issuing a digital stock certificate, and we have a publicly traded fund in the Cayman Islands. We are also very interested in having our fund traded on a traditional exchange like the London Stock Exchange. So part of our fund hopefully will be doing that to show that we are very much interested in meeting standards of compliance. But to do this in the United States, to deal with those transfer restrictions, we would essentially be paying about $3 to $5 million in compliance costs and accounting and filing. It's about 1,000, 1,500 hours a year worth of lawyer time to actually, and lawyer and accountant time to actually be compliant with publicly traded funds in the United States, and that just wasn't tenable for us. So we started looking at international jurisdictions for that.
Well, definitely, like Jonathan said, it's a complex task to handle. We are offering in global. So in the U.S., we have to comply with Reg D, which is a SEC regulation. Like Johnson just said, there are very detailed restrictions in terms of the qualification of investors. So in the U.S. we are Reg D, and in outside in international market outside the U.S. we are Reg S, and we have embedded security laws of 48 countries in our tokens smart contract. Meaning, investors come from those 48 countries where there's a security law, we have to be compliant. And most of the countries, their security law probably have the similar requirement like US. In terms of the entry barrier, probably a little bit lower, and some country may have specific requirement. Like in Japan, not only you have to have like equivalent of 1 million liquidable asset, and you have to be a frequent trader. You have to have trade at least 24 times in the past 1 year to be qualified as a purchaser. So in some other countries like Malaysia, there's a security law, but there's no entry barrier, so there's no qualification issues. The rest of the country outside this 48, either they have no security law, or they don't have qualification requirement. Like Zimbabwe, there's no security law, so everyone could purchase. But this just gives you some flavor of how complex it is. Because in one hand, blockchain provides such an advantage. There's no border. People can freely conduct a transaction trade. But on the other hand, you have to be compliant. In so many different jurisdictions, you have to really take care of those details of the security laws.
That's great, thank you. And Rob, you want to say something?
Sure. The one thing I would also add is that for many of you who might be thinking about doing a tokenized fund, or are any of you thinking about maybe doing an ICO? Raise your hand if you've thought about doing that. So a lot of people want to structure their offerings outside of the United States because of the many challenges. And in my perspective, I think these challenges are largely presented because in the United States it has actually a very sophisticated securities law regime, perhaps the most sophisticated in the country, alongside the UK and maybe Singapore. But if you're planning on doing an overseas offering to avoid the registration issues for securities in the United States, you still have to wrestle with United States law. Herman mentioned something called Regulation S. Have you guys heard of Regulation S? So Regulation S is basically a safe harbor, which is if you're trying to do an offering of securities overseas and you don't want to be picked up by US securities laws, you have to actually follow some very specific requirements. And one of the requirements is that there's something called in this a distribution compliance period. And so in this ecosystem that we're talking about, that means that you have to ensure that for a 12-month period following your issuance, that no US person actually ends up picking up one of your tokens. If one person, US person, ends up picking up your tokens, guess what? The entire application of this US securities laws applies to your token. And so you spent a lot of money on overseas counsel and US counsel, and you totally blew it. You probably also violated US securities laws in doing so. And then also, after that 12-year period, people who are reselling your tokens have to actually find an exemption if they're going to be selling them to a US person. Typically, that would be something called a 4A1. But these are things that you have to keep in mind, that there are serious structuring issues about how you actually design your token and how you actually plan on having it resold, and what exchanges you might be using, because a lot of the exchanges you might want to use, you want to make sure that they are capable of doing some of this Reg S compliance with the distribution compliance period.
That's perfect framing, right? So as a non-lawyer, that's a lot, right? That is a lot, yeah.
I have a question. So obviously, a lot of what you guys are talking about, and it's really awesome so far, is the impact of your raise, like the investors who are investing in your fund. What happens with your other Series A brethren? I know you're a Series A fund, I've read your white paper, haven't read yours yet, but yeah, you guys early stage? Or?
No, mostly
Later stage, okay. So your like co-brethren in your Series C, Series D, and your co-brethren in Series A, do they need, how do you structure it where you're creating a liquid share while the rest of them aren't? How does that work with hanging out with your friends in the VC world?
So from the startup perspective, from US securities law perspective, we look like any other fund. We do need some data from the startup. We have a third party that does a rules-based valuation on our portfolio on a quarterly basis. We announce the aggregate values of our portfolio. So I do need some numbers like revenue numbers, traction numbers, that sort of stuff on a regular basis. So that's a little bit different, going to be a little bit different in our term sheets. But aside from that, if you are just a vanilla startup doing, the next Instagram for wombats, wombatagram, we will be able to invest in your seed or Series A round just like any other fund, and you wouldn't see any difference. The difference for us is because our fund is liquid and is trading, I don't ever have to ask a founder, what's your exit strategy? Because I don't care. So I can invest in a company in Uruguay, I can invest in a company in Argentina, Colombia, Dubai, Turkey. I don't care where. What I do care about, what I have to ask the founder is, what is your strategy for growth? And how have you been growing? Which I think is a much different perspective, and startups around the globe really don't have access to capital because they cannot prove to their local investors that Google is going to acquire them. You talk with a Mexican investor and they're like, El Google? No. Which in most of our portfolios from overseas, and so that's a market need that we're actually addressing, and that it's why we're doing this, is we'll be able to own some of these emerging markets because nobody else can invest there.
Yeah, this is interesting too, right? Because we're getting into investment thesis now, right? So this is like the thesis of the fund, and in my mind, we've talked a lot about how the fund's structured. There was all this legal jargon, right? Unless you're a securities law attorney, like Rob, you're probably not going to be able to diligence this yourself, right? So what do you do when you're presented with the opportunity to invest in a tokenized fund, right? How do you know there's all these complexity that we're talking about of just setting up the vehicle that you can invest in, right? And so you need to, I guess, exhibit a level of legal diligence when you're looking at these things, because to Rob's point, they can fall apart, right? And so you want to be careful there, and you also want to diligence the investment thesis, which is what we were just talking about, and your investment strategy and the liquidity of underlying investments. And so, curious, if you were to offer advice to folks on how to look into the fund, what would you offer them with regards to the structure, and then maybe we'll pivot towards investment thesis.
I can go. Definitely, one advice is to get good partners, and we have engaged a group, probably the best of the professional services firms, to be our partners. Just like Nick and Rob mentioned, those burdens, legal, valuation, compliance are huge, are substantial. So we have engaged DLA Piper as our chief legal counsel, and we have engaged Deloitte as our official auditor. Actually, we are the first ever tokenized fund Deloitte has approved to be the auditor.
Well, I didn't even know that, so.
Okay. Tim, I forgot his name. I will share with you. Okay. So and also we engaged another firm in San Francisco, Duff & Phelps, and they are compliance and evaluation service firm, and they are doing probably 80% of the unicorn companies evaluation. So for us, most of our assets are in late stage, so the valuation is relatively transparent, and this tokenized vehicle, offers both the global access and liquidity, for the investors with this real asset-backed security token. So I think that makes create value for the investor.
Yeah, fair to assess. I would invest either fund, the way I would invest any fund, right? It's really not that much different. The difference is, all things equal, if I have the option to get a digital representation of something that might have more liquidity, it doesn't hurt, right? As long as you're comfortable with the way that it's structured and you do your legal diligence, I would view the tokenization of my otherwise equity interest as only an added benefit. Is that fair to say? Would you agree with that?
In terms of the legal due diligence, if I screw this up, I stand a chance of going to jail.
Skin in the game.
And I served on an SEC advisory committee, and the SEC is friends with the FBI, and the FBI has guns in jails. So I've spoken with a lot of different law firms to get many different perspectives on this. One of our primary lawyers used to be a deputy U.S. attorney, and he actually brought the first two enforcement actions against crypto companies in San Francisco in 2014 and 2015. He then went to the private world. And when I talked with him, I said, okay, dude, if I screw, I need, in the spectrum of enforcement actions that I've seen the SEC do, sometimes they give a stern wag of the finger to someone. Sometimes they send Bernie Madoff to jail. Sometimes they do a rescission of all the funds. You have to return all of the funds, and you can never ever work in finance again, or you can never be a director of a company again, or slap, here's a fine. So if this is the spectrum of potential legal consequences that I can have, what keeps me out of jail? What allows me to work in finance again? What does not make me give all of my money back and pay a fine to the SEC? And at worst case, if it's a stern wag of the finger, I will take that, but I'm also going to talk to the SEC beforehand to be sure that, hey, we're cool, right? I'm here, I'm not trying to do anything shady, just I'm cool. If you have a problem with me, call me. Here's my number. And he actually gave us some really, really great advice. It's amazing when you ask them to say, qualify my risk for me. I'm an entrepreneur. I'm used to actually taking on business risk. My job is to say, what is the minimum amount of business risk that I can have to maximize the financial outcome? What is the minimal software product that I can build to maximize upside? And it's been sort of a, what is the minimum viable legal risk that I can take, while essentially leading the charge on the future of finance. which, you know, if we get this right, in 10 years, we could have billions of dollars in assets under management. And I already have a string of other fund managers who are like, dude, if this works, can you help me do this? I'm like, yeah, it'll cost you though.
And that's perfectly framed, I think. I think that's the arena that everyone's in, right? So coming from a world of like big, you know, Fortune 50 type companies and everyone, you know, there's a corporate board that approves everything. There's no rules, and well, there are rules, but they're unclear in a lot of these, you know, in the space, right? And so you have securities law uncertainty, you have tax uncertainty, you have global uncertainty, right? You have commodities rules uncertainty, and so none of these pieces talk to each other. So you need to evaluate risk piece by piece. So I think what you said, you know, on how to manage risk really is you're you're taking something that's uncertain and trying to de-risk it systematically, and you need to do that legally from a tax perspective, right, from a global perspective. So I think that when, you know, hearing entrepreneurs, so you know, just you know, I do a lot of ICOs as well. Probably have 100-ish of them that we've done. So, you know, when we take on a client, we won't take on a client that doesn't have this kind of attitude, right? You need to like be aware of the risk. It doesn't mean that you aren't practical at things, but you need to have good legal advice, you need good tax advice, you need to de-risk something that's uncertain in a way that protects your investors, right? And so you see that at the fund level, but all the way down the chain, at the portfolio company as well. So maybe to pivot a bit towards sort of investment thesis. You know, if I had to think of how I invest in here, I could go, you know, from the folks in this audience, I could go and purchase assets directly, right? So I could go buy Bitcoin, kind of challenging for the average person, right? You know, the person in the corner store doesn't know how to go and set up a wallet, right? Register, go through email KYC, and then even if you do have that technical appetite, you probably don't have access to a lot of the deal flow that maybe some other folks do. So maybe if you could give a bit about why invest in the fund versus invest directly, and then sort of what stage that'd be helpful.
Well, I think first is the access. We have done some internal analysis among the current unicorn companies in the valley, like Uber, Airbnb, Lyft. Actually, if you are not, Sequoia, Kleiner, Battery, those we call them like a first-tier venture firms, your chances to get in those deals is pretty slim, and you have to wait until they go public, become a public traded company. So, in my world, it's the Silicon Valley venture business is pretty much like big boys only club, okay? And you have to have a deep pocket, or you can you have to have a long time horizon, wait for 10, 12 years to have an exit. So for the ordinary folks, they have the demand, but those doors are not open for them. I think the ICO definitely indicate the demand from the ordinary investor. They want to participate into this game, but the entry barriers so high, and even various legal restriction just keep them at the door. And in other sectors we have seen the similar the situation, like real estate. You can invest in a condo, you can invest in buy a single family house, but for ordinary individual retail investors, you cannot invest in a commercial real estate. It's very hard. So blockchain tokenized fund really opened the door for the ordinary folks and led them to participate in those sectors, where they used to be excluded. Basically, they are underserved from by the financial definition.
So in terms of investment thesis for us, this is Fund 5. Our first 4 funds, which we did some innovation and structuring, have been doing about 30% year over year for the last 5 years. I heard that's actually kind of good. And so with this fund, one of the big challenges that we've had is with companies, our portfolio companies in emerging markets. That's most of our business. About half of my portfolio comes from Latin America right now. I grew up in Latin America, so I speak Spanish. Latin America is about 10% of the world's economy. It receives about $250 million a year in angel and venture capital, which is half of Uber's last check from Toyota, is what gets invested into an entire continent. And we have hundreds of thousands of tech entrepreneurs in our community who just don't have access to capital. So we are going to be one of the only venture funds that can go into these markets and invest in these companies, because I don't have to ask, is Google going to acquire you? And so it's kind of a greenfield. The second, in the same problems that we see there, we also see in places like Africa, we see places in the Middle East, we see places in Eastern Europe. All of these chronically undercapitalized parts of the world that have brilliant engineers, that have great markets, that have amazing talent, we're going to be one of the few vehicles that will actually be able to invest in them. And our strategy is we're going to be doing seed and Series A, but if you need more than $5 or $10 million, then let's just issue digital stock certificates and let's help you go to a crypto IPO. Let's, instead of trying to convince, Sequoia that you should really invest in this Argentine company, when the partner that you're talking to, it wasn't Sequoia, it was another fund. But the partner, I've actually had partners in Silicon Valley tell me, dude, look, Narcos was an amazing show. I'm never going to invest south of the border. That was 4 different funds that told me that. And they weren't all connected. I mean, it's this perception that Latin America is just corrupt and there's narcotics. But there's also, 10% of the world's economy, and a lot of smart, intelligent people trying to transform their economies. So in our mind is, how do we build kind of this alternate bizarro universe of crypto finance? Let's do seed and Series A investments out of our fund, and then let's actually take companies to crypto IPO, and then let's actually create or partner with exchanges that are specifically focused on trading digital securities. If we do that, we're opening up trillions of dollars of economic value in markets that have been woefully undercapitalized. That to me, I don't know, would be a good bet.
Yes, it's both very helpful perspectives. We're sort of I view this as we're at a bit of an inflection point with the crypto industry. I think it's finally got enough momentum where it's like, it's a thing and it's not going away, right? People doubted it for a long time. And you're starting to see, you're sort of right at the cusp of like institutional investment, right? And so you have, public announcements from big funds like BlackRock, right? Goldman Sachs is looking at it. New York Stock Exchange, ICE, I think is the parent entity, announced publicly that they're in collaboration with folks. So it seems to be getting a lot of momentum. So Rob, I'm curious your perspective from like a securities law perspective. Is it at institutional adoption, or sort of maybe you could give us an update on sort of securities law thinking, because I think that's what it will need to get mainstream adoption. Is you need regulation.
Sure, and so I think that's the cautionary note is that we are at a very early stage of this technology, and it can move in a lot of different directions. And it's not just that the technology is an early stage, it's also the regulatory environment. We're dealing with the regulatory environment comprehends basically a paper security world, and here we're talking about digital representation of securities. And so it's very different, but as you know, a lot of the major financial institutions are operating in this space. And the SEC sent a letter to a institutional fund management association called SIFMA last January. And this was more on the registered fund side of things, like ETFs and mutual funds, which you probably have heard about in the news. A lot of people have been trying to get ETFs approved, like the Winklevoss, and they keep getting shot down by the SEC. And so the SEC sent this letter to SIFMA and said, we will not approve any one of these products until you can answer all of these questions about valuation, custody, liquidity issues, arbitrage issues, and concerns about market manipulation. And I actually represented SIFMA in actually preparing a response to that letter. And that actually was a project that involved speaking with all of these major financial institutions that are members of SIFMA. And it was a fascinating exercise because, as you know, everyone is interested in this space. Nobody's yet really forming funds in this space because they don't know how to do it yet. But they're all, and they're not actually investing clients' assets into crypto yet because they don't want the liability and they don't know how to deal with the custody of private keys. But they're all playing with their own personal capital, their own institutions' capital, just so that they can learn about this space. And so there is a huge momentum, but what I see is the great barrier for growth in this space is the lack of regulatory oversight for the cryptocurrency exchanges. And this is an issue that affects the tokenized private funds, but it also is the barrier before there will be retail entry for mutual funds. All of these cryptocurrency exchanges have the look and feel of public securities markets, where there are bid, ask spreads, etc. But you look underneath the hood, they're completely opaque. There's no guarantee that customers are treated fairly, and when you see with some of the concerns about Tether, for example, and that exchange, there's a lot of concerns that there is a lot of fraud happening in the marketplace. So I do think that once we get a regulatory environment that actually shows how a exchange can actually be registered, either with the SEC or the CFTC, it's unclear what agency would do it, and then we actually start having these exchanges, we're going to see a dramatic takeoff in private funds operating in this space, registered mutual funds operating in this space, and we'll probably see, in general, a broad tokenization of securities, so that corporations and startups might actually be using the blockchain for their cap tables and for their issuances of securities.
Yeah, no, that's perfectly framed. I think I'm not a securities lawyer, right? Caveat. But the Securities Exchange Commission has two kind of mission statements, right? It's protect investors, but it's also foster confidence, right? And I think they take the second prong of that seriously, because they didn't just come right out and squash this. And I think we've heard some favorable comments from them as well, in terms of not directly complaining, but from the sort of number two. So I guess pivoting towards how would you for the average person who isn't super deep into all the nuances of crypto, right? Like, so we hit on some key issues: security, custody, right? Audit's hard. How do you prove it's there, right? Fraud, market manipulation. For the average investor who has a diverse portfolio, my guess is there's probably the lion's share here aren't full in on crypto, right? Like, we kind of get blinders because we're in it all day, or at least I am, right? So you forget that there's all these issues that maybe aren't top of mind for folks, but are real risks, right? Like, custody is an issue, right? How do I have custody of an asset? Security is an issue. Like, if you're going to be investing if part of your investment strategy is I'm going to invest in a portfolio company, a Series A, I'm going to take back equity, just plain vanilla, right? Common stock or Series A or whatever. But I'm also going to get a token kicker, right? Maybe I'll get a token allocation that will then float, trade in the market. Like, how do you safeguard those, right? Procedures around physical security on a wallet. These are things that the average fund doesn't deal with, right? You take it for granted that your money's protected at a bank and you have this centralized institution that helps you, right? If there's a problem, I'm insured. So, I'm curious, when I hear someone tell me, well, yeah, 50 years of investing experience, I'm like, well, that's fine, but you don't know anything about what you're talking about in this industry, right? So, you have fund managers who are saying they're deep in crypto, but they don't know what an ERC20 token is. So I'm curious your perspective, if you were on the other side of investing, what would you look for in sort of a fund, and how would you address those issues without becoming an expert?
So things that I've actually been suggesting is if you buy a little bit of the hype, or you think that this might become the future of finance, it actually makes sense to allocate a very small percentage of your personal portfolio to it. One of the professors at Yale said, you know what, you should have between 0.25 and 6% of your personal portfolio into crypto, depending on how much you believe in it. I like 6%, but no, take baby steps. Buy a Bitcoin or a tiny little piece of a Bitcoin. Buy an Ethereum. Learn what a wallet is. Trade it with somebody else. These are high-risk things, and it's a different way of looking at the world, and it's a different way of thinking about things. And it's very strange because nerds like me just go on and on and on about this stuff, and it's interesting, but I don't know. Do I trust it? He's got a ponytail. But you do a crawl, walk, run, but if this is the future of finance, then maybe it actually stands to reason that you should start paying attention to it, because if you have been looking at this for 5 years, and 5 years down the road, you're just like, what just happened? I had a meeting with a managing director who reported to the C-suite of a very, very large, well-respected, name brand recognition investment bank in New York City, and he was head of crypto. And his thing to me was, Jonathan, is this whole Bitcoin a thing, or is it going to be like Beanie Babies? And I was like, is it really a currency? I don't really think it's a currency. And I was just like, oh my gosh, you're like 3 or 4 years behind this whole thing. Like, it's nerds like us who are pushing the boundaries who are going to end up eating the lunch of these investment banks. And it's going to be our partners like Token Market who have helped companies raise $400 million in crypto markets and who own 10% of the top 100, 10% of the market cap of top 100 cryptos is their portfolio. And like no one's heard of them because they're a bunch of Finnish dudes. But it's gonna be groups like that that are gonna dominate this industry, and unless people start to take baby steps towards it, you're gonna get risk leaving behind, because I have never seen a technology move so fast. And I've seen a lot of technologies. Every 8 to 10 weeks is a new generation in this business, which is bizarre.
Well, definitely there are a lot of uncertainties and risk factors in the market. So that's why we're taking an incremental approach in Andrew Capital. We take the real company, real assets, and tokenize them. And the valuation is transparent. And in terms of those, regulatory, legal landscape, my favorite, analysis is just compare today's crypto market to the traditional capital market. What else? What component is missing? There has to be, provided either by technology, by a new kind of services firms, like a custodian, like auditing, like the settlement, like reporting, you name it, everything. So before investor could feel comfortable, I think it's still now it's still infant stage. Think about technology. The infrastructure of whole Ethereum could not even support a game, CryptoKitty, right? So that means we're not really ready yet. So many companies claim they're going to create a decentralized app to disrupt one industry and another. So I don't think it's going to happen overnight. Of course, market investor probably will take the same incremental approach to absorb those technology progress.
I think also right now we're in a period where we've just come off of about 1.5 years of really bad blockchain projects that are out there. I think a lot of people have been attracted to this space because of what I call false perceptions. The false perceptions that money is easy to come by in this space, and that I don't need to deal with my investors because I don't even know who they are. And I just saw a lot of these various prospective ICO projects that have crossed my desk. I've really puzzled at, and often I ask myself the question, like, why do they even need a token or a blockchain to actually do what they say that they want to do? And so I think that there's a lot of quality screening that needs to be done in the course of any due diligence, but I think that we also need to be mindful that this technology started with a philosophical basis focused on pseudonymity, not necessarily knowing who people are who are actually interacting with the blockchain. And I think that that is a problem for how this space is going to grow. And especially when you're talking about taking other people's money to grow businesses, and you have real life issues such as anti-money laundering and not wanting bad actors to be using your token to actually as a fungible way of laundering bad money. it seems to me that the blockchains that we have today are probably not going to be the blockchains that are most successful in the future. And I would imagine that at some point in time, we are going to have blockchains that are going to be more capable of identifying who's actually interacting with them. And so that there is a possibility in my mind that the pseudonymous nature of this ecosystem that we have right now might become much less pseudonymous. And that actually is something that could disintermediate in many respects, or even facilitate know your client and anti-money laundering laws.
Yeah, no, that's a great tone. I think it goes with everything that we've been saying up here, is that you need to have a fund that has done the right level of diligence, that's got the right advisors. No one knows every avenue in the space. So if you've gotten bad legal advice, right, I wouldn't invest in the fund, right? And so part of the investor diligence should be that, are you structured correctly? Have you gotten the right advice? Have you worked with people? How are you managing uncertainty, right? And then to Rob's point on the underlying investments, I mean, from my ICO experience on sort of the other side of the house, that's the first question I ask. What Rob said is, why do you need a token, right? Why blockchain your business, right? And if there's not a business reason, it's just the money grab, and it's not a good company, right? And so we turn down clients all the time, or potential clients, to say, hey, we want to pay you $1 million to help us on this ICO. Can you help us? And I say, I'm so sorry. Your business model doesn't work. I don't see the value in it. You got bad legal advice. So I think it needs to be a super degree of skepticism when you go into the underlying investments, and you want someone who knows the space. So I want to stop the presentation and open it up for questions for folks. Yeah.
So I just wanted to thank you. I went into awesome panels, just super stoked. Jonathan kind of described about how you're opening a lot of markets which are not being tapped, and about how 80% of the investments are happening in Silicon Valley. And I always thought that the explanation for that was kind of what was being described by the Andreessen Horowitz crew, in which they say that it's like this arm's length clause or the 20-minute drive clause that investors and limited partners like to feel like their money, if it's going to go somewhere, they at least want to see where it's going to go, and there's like a reputation economy that they can actually feel confident that it's not just going to vanish overnight. So I'm just curious, are you doing something special in your fund to make the LPs more comfortable with putting their money into these dark places that no one has heard of?
So, yeah, we're actually being held to account. We are issuing quarterly audited, we're going to be issuing quarterly audited net asset valuations. I'm interested in actually having compliance that would be at the London Stock Exchange standard for publicly traded funds there. That, in my mind, is also very interesting, and I too thought that money was just in Silicon Valley because there's $4 trillion worth of tech companies here. That is a big reason, but if you actually talk to venture capitalists or angels pretty much anywhere else in the world, the head of the largest angel investor group in the Middle East, Venture Souk, you ask him what his biggest pain in the ass is, he's like, liquidity. You ask the top venture funds in Latin America, what are your biggest challenges? They'll say liquidity. There's no exits, there's no IPOs. If you ask investors in Europe, what is your biggest challenge? They'll generally say liquidity. You ask entrepreneurs what their biggest challenges in these markets, and they're like, no one wants to invest in my company because, my market's too small, blah, blah, blah. And so after hearing that so many times, you're like, someone should solve this liquidity problem. And the market has spoken. I mean, there's been, 12 to $18 trillion raised through ICOs in the last 24 months. Seed stage investment in the United States is about, 6 to 8 billion? So ICOs have actually eclipsed seed stage investing already in Silicon Valley. And the advantage of the ICOs, yes, there's a lot of crap, yes, there's been a lot of fraud, but there have also been amazing companies in Lithuania and Latvia and Slovenia and Argentina that have actually have product, that have customers that are able to actually raise significant amounts of capital. And for me, the crypto revolution is not happening here. The vast majority of the technology is coming from Eastern Europe. The vast majority of the capital is coming from Asia. You all are some of the few and the proud in town, primarily because of the regs. And the innovations aren't gonna, I don't think, happen here. I think they're gonna happen overseas. Yeah.
Well, I was here during the .com, bubble revolution, whatever you call it. It's right now. I'm the whole crypto market. Just remind me, the late of the 90s here in the Silicon Valley. We have experienced, something, very similar. Again, what my view is, those missing components in the market, auditing, governance, has to be provided, by somebody, or the market have to create it, those sectors. From my view, there are opportunities, and for entrepreneurs, come up with some ideas to solve those problems, and to protect the investor's asset, to make this investment more transparent, make the the market more liquid. I think that's great opportunities.
Sure. So as you guys have mentioned, liquidity is really the main benefit for investors investing in a tokenized fund. And in order to facilitate that liquidity, we need security token exchanges. So how have you been going about diligencing Open Finance Network versus T0 versus whatever other alternatives may be out there?
Well, I'll just make a brief comment because I'm not exploring the different cryptocurrency exchanges, but you are right. If an exchange is going to be hosting trading in securities, it either needs to be a national registered exchange or it needs to be what is called an alternative trading system. And an alternative trading system, if you do some Google searching in the space of ICOs and whatnot, every now and then you'll see references to it. An alternative trading system basically requires like broker-dealer transactions. And there's a lot of headaches in terms of how this technology interacts with the regs for what is an alternative trading system. And so it's also curious to see what is happening with like Start Engine and T0. I think they recently joined forces because they decided they wanted to, they were both trying to create an alternative trading system. I think they just really ended up having some real headaches. And I don't know exactly what they're wrestling with, but the fact of the matter is there isn't an alternative trading system that yet exists under US law for trading in security tokens. Hopefully, and I would think that we're going to get one at some point in the future, but it might very well be an overseas jurisdiction that would be functioning before there might be a US-based exchange.
Yeah, and I'll just echo that. I mean, if you're investing in a tokenized fund solely because of the liquidity factor, you're doing it wrong, right? Like, the liquidity factor is the cherry on top. To Rob's point, like the markets aren't there. But if you look at a tokenized fund, you say, these guys are investing in underlying tech companies at some stage, early, late, mid, right, growth, mature, but they know the business. They went through the pain. All the legal stuff that they talked about at the beginning is excruciating. It's what I do all of my time, right? And so to go through that gives you a deep understanding of what it takes to tokenize an underlying asset, right? To go invest into a company. So if you're investing solely and you're focused only on liquidity, you're missing the bigger picture, right? The bigger picture is like you need someone who knows the underlying investments. And so the investment fund thesis is what you should be focused on, not the liquidity, right? And so the liquidity is a nice to have, and like maybe the exchanges will get there, right? In terms of security, T0, everything else. But for right now, they're not. You should think of them as not liquid, but might be. They have a little more liquidity than a normal fund, but if the securities markets open up, they'll be very liquid. But when I assess a fund, I view it that way more. Is that consistent with how you do it?
No, I mean, one of the unique value propositions that we're bringing to the table is liquidity. But the fact of the matter is that actually just lets us invest in amazing companies no matter where they're at in the world, as opposed to other people who can't. In terms of the exchange question, we're actually talking with a number of them. There is a global regulatory arms race for which country is going to be the hub for crypto finance. Switzerland, there's been a lot of buzz around that, but you know what, when you look underneath it, fund managers are taxed at 7% of their wealth. So I'm not interested in going to Switzerland. Gibraltar has actually been doing a lot of pushing to actually get regulated exchanges. They were one of the first countries, kind of in the online gaming, online gambling casinos. Dubai, the entire government of Dubai is supposed to be on-chain by 2020. Every license, every permit, every procurement, everything in the government is going to have IT that's actually backed by a blockchain. I don't know how well that's going to go, but one of our partners, Token Market, is about a couple months away from getting a license to actually run a stock exchange there that will trade digital securities. We're talking with an exchange in China, L-Bank, that is really focusing on digital securities, and they have a trading volume of about $100 million a day, which is pretty much what the London AIM exchange is doing. And I only see that as getting worse. There's a lot of young, kind of emerging stock exchanges that are going to come out. And I agree, a lot of the exchanges in the United States are just going to get spanked. I just don't see how they're going to be able to, meet the regulatory standards for another couple of years. So, sorry, y'all, this ain't for you.
I have two questions. One, I did one of those campaigns, Start Engines, but the Start Engine changed everything on my document or the compliance. They totally changed whatever the idea I get. I have it in mind as an ICO. And then the second question, the real question is, which Latin American country is the most friendliest blockchain?
Which country in Latin America is friendliest towards blockchain? Mexico actually just passed La Ley Financiera, so they actually just passed a fintech law. It's probably one of the more advanced fintech laws in Latin America, and if not the world. Uruguay, there's some rumblings there. I would expect some interesting stuff happening in Costa Rica. They've actually been pretty forward thinking in terms of online gambling and that sort of stuff too. That's just been a market that they've pursued. And I've other countries that are interesting stuff is happening. Malta is like, oh my gosh, crypto. Tokyo in Japan is actually really, from the government ministers all the way down, they've actually been pushing blockchain. You had the mayor of Tokyo at a recent event in Singapore, at a recent hackathon in Tokyo saying, we want Japan to be the crypto finance capital of the world. That's surprising to me. So there's a regulatory arms race, and a lot of nerds like me have plane tickets, will travel, and as long as I have a laptop and an internet connection, congrats, I have a company. And so there's a lot of jurisdictional arbitrage that's happening right now, and a lot of kind of shuffling around on these issues, specifically because of the regulatory risks inherent in some of these countries.
Okay, so I'd like to thank Andrew. Andrew put this together from HackFund. Amazing job. Really good. You want to say a few words?
Really briefly, thank you everyone so much for being here. But I want to give a big shout out to Starfish and John for having us here. It really means a lot. Let's give a big round of applause.
Obviously, thank you to all of you for coming here. Thanks to the wonderful panelists. We're going to wrap it up, but we'll be around. So if you want to ask, if anyone wanted to ask a question, you get a chance to. We'll be here networking. So figured everyone wants a drink, so we can probably wrap this up. But thank you all for attending. Thank you.